Hi, I'm Gary White with Channel 6, Central Kentucky Television. I'm here with Monty Parman with the May and Parman Agency.
Yes, sir.
Happy New Year. It's 2018.
Yes, sir. It's 2018. Thank you very much, Gary.
Yes. And for 2018, we want to find out about buying and selling homes. So lots of people have different questions. They might be saying this is the year that they're going to eventually finally buy a home or move up to a different home. Or this may be the year they want to just sell and do something different. So let's start with the selling options.
Okay.
If someone's looking to sell a home in 2018, is there a good time to sell, or is it always now?
Right now, I would say the time is now. Economics 101, the first thing you learn, what sets pricing is supply and demand. Well, right now, the demand is higher than supply of housing in Marion County. So I don't care if it's 10 degrees outside or if it's a nice 80 degrees outside. You know, when it's this severely cold, it might slow things down, but it's the prime time to have your property on the market because of simply what I said, supply and demand. Right now the supply is down, demand is high, interest rates are low. You know, there's a lot of pre-qualified buyers out there ready to buy, so there's not a better time than right now to have your property on the market.
Okay. Now, if somebody is looking to sell, should they do stuff to get it ready? Like somebody's thinking, oh, this room hasn't been painted in years. Should they paint it? Should they do that kind of stuff? Or should they just sell it and let you come in and price it the way it is?
I think the best thing to do is have a real estate professional come out and look at your property and give an assessment of what you need to do. A redone, remodeled, updated home always sells quickly and in the bat of an eye, and you get more money. However, if you have done that and have been living in the home and living it out, you can't count that as an expense into the home because you've got to enjoy it. Yes, you can get more for your home, so you're getting the money back. Now, when you get into how much do I spend to put this house back on the market, now that gets to be a very debatable question. You know, you could go in and do some simple things like cleaning the carpet, painting some rooms, things like that. That's inexpensive. You are always going to get your money back. Now when you start talking about tearing kitchens out, tearing bathrooms out, putting all new hardwood flooring in, things like that, you've got to look, is my input going to exceed what I receive in income from the property? You have to study that and study it closely. You know, you see a lot of the programs on TV about flipping homes. Now, they buy one that's really in bad shape. Now, that's a great idea. Go in and strip that thing out and bring it up to the standards and make it that way. But if you've got a nice home that's in good condition, you're probably going to want to change a few things, update a few colors, make sure the paint's good. If you have carpet, get it cleaned. We're seeing less and less carpet in homes all the time. You're seeing less and less carpet in homes all the time. But I think it's a big decision that you need to have a professional out to analyze your home. We tell people all the time, we are glad to come out and give you a market analysis of your home with no obligation to list, and give our recommendation of what you could do to get your home ready. So I really didn't answer your question, but
it's better to have you guys come and take a look.
It all depends on the situation. But yes, anytime you can come in, especially when the weather breaks a little bit, to get the yard looking good, get new mulch down, get the yard trimmed up good. Things like that are so important, and you're not spending huge amounts of money. You're just dressing your home up, making it nice for the next person to come into.
Absolutely. Now, also, when somebody's thinking of listing a home, do you find it easier or harder for them to have a price already set, or should they just let you guys come in and come up with a price?
I'm sure most people have a general range of what they would like to have for their home. The prime thing, one of the things that happens real often that is not a good thing, they'll say, we'll come in and say, okay, let's just say I've looked at the home and I said, I think your price range, your listing price range needs to be $150,000, give or take a little bit either way. Well, they say, well, let's start out at $180 and just see if anybody bites. And my answer is always this. I said the best time to sell your home is the first 2 weeks it's on the market. So if you price it at 180, and we know the market range is going to be between 140 and 150, you're not going to get the people calling, you're not going to get the people coming to look. Your home gets a little bit stale on the market. The ideal thing to do is price your home. I'm not saying underprice your home, but price it in the market range of where it is. And especially if you're in that 125 to 180 or 90 price range, if you price your home properly, it's going to sell, and it's going to sell quickly. So it is very important to, I like people to have an idea of what they want, but you need to listen to that real estate professional that can tell you where it should be priced, because
It needs to be realistic.
most people, all of us, including myself, everybody, always thinks their house is worth a little bit more than their neighbor's house is worth. You know, just because it's their house.
Right. So also, if somebody's thinking of selling their house, should they already have an idea of where they want to go before they list it?
If you're in the right price range and your house is priced properly, you better have a plan in mind of what you're going to do, because more than likely it's going to sell quickly. You know, most people have an idea of why they're selling. They're wanting to build. They're wanting to move up. They're wanting to get a bigger home. They've outgrown the home they're in. They've been transferred with a job. Whatever it is. They're getting older. They're ready to leave the house to go to a condo or an apartment or some kind of senior living. You know, most people have a reason why they are selling. And so usually they already have a plan worked out. But like I said, you better be ready to move quickly if you price your home right.
Now, moving on to buyers. If somebody's looking to buy a home in 2018, is it a good time for that?
Yes.
Are the rates good?
Oh, the interest rates are excellent.
And they've been really good for a while.
They've been good for a long period of time. I came back to work. The average home interest rate, and had been that way for 20 years, was 8.5% on a variable rate mortgage, and it was 9% on a fixed rate mortgage. So just think about where interest rates are today. If you have good credit score, you want to go with a lower number of years, 15 years say, which makes your payment higher, but you're paying your house off twice as quick, you're going to get an interest rate, good credit score, good credit history, strong buyer. You should be able to get the interest between 3 and 3.25%. 3 and 3.25% fixed. If you're on a 30-year loan, you're going to be somewhere in the 3.8 to 4.25, depending on your credit score. I just sold a home yesterday, and it was right at $100,000. The buyer is a young person. She's single. She's 23 years old. She has a good credit score, and she was able to get a fixed rate mortgage on 30 years at 3.95%. Now, she's borrowing 100%. She doesn't have that 20% down, which can lower your interest rate. But, you know, your rent, your payment is cheaper than your rent.
Yeah, yeah. So what qualifies as a good credit score?
Gosh, that is a huge question. Now, to get qualified, period, you need to be, depending on the loans, they all allow a little bit lower. Some require a higher credit score and some a lower. 6.25% you can get in. Now you're going to pay a higher interest rate. You're going to pay higher closing costs. You're going to pay a lot more in fees. But if you're at the 675 range, you're going to be good. Now, once you hit above 700 or above, you're golden. I mean, everybody's looking to loan you money. And then at 740, you become a preferred lender, and a lot of things that can be overlooked, and you can bargain your interest rate down, because everybody's looking to make you a loan.
So getting it to the high 6s to the 7s, you're going to be able to.
If you can get into that, you know, you need to be at least 6.25% to get in. But you're going to be limited on the programs you can go into. Once you hit 650, you're doing good. 675, you can qualify for any program out there.
Now, that being said, do you think it's better for somebody to be qualified before they start looking, or should they come to you, start looking, and then go and be qualified?
Always suggest people to get pre-qualified. Here is 2 reasons. Number 1, you are a much stronger purchaser if you are pre-qualified when you make an offer. People are going to look at you completely differently than they will without a pre-qualification letter. And another thing, get pre-approved and let the lenders tell you what price range you need to look in, because there's nothing harder than going out and looking at $150,000 homes and then being told you need to stay in the $80,000 range. Well, if you've looked at $150,000 homes, it's really hard to move down and be satisfied buying a home in the 80s. And you will get more attention, more time from an agent that knows you're pre-qualified. You know, most agents will want you to be pre-qualified, but before they invest a significant amount of time into helping you find a home.
So what is the difference between pre-qualified and pre-approved? Is there?
They're the same thing.
Same thing.
Yes.
Okay.
Pre-approved, pre-qualified, they're exactly the same thing.
And if somebody is first time doing this, should they consider using a mortgage lender or their bank, or do you find there's a difference between the two? Or a suggestion you would make?
More than likely, if they're a first-time home buyer, they're going to need either 0% down money or money that only requires 3.5% down. Basically, what you're looking at, if you go through the secondary market, which you can still go through the local banks to get secondary market money. They have people within their organizations that work to put you in the secondary loan market, and that's not a bad thing. When I say secondary loan market, it doesn't mean that it's a lower tier or lower quality loan. Yeah. It simply means you can get in by using PMI. I'll go through some of the basics here. PMI is a fee you pay every month in your payment to where you don't have to have 20% down.
That's mortgage insurance.
That's mortgage insurance. It protects the lender in the event of your default.
Right.
So if you default on your loan, it protects the lender. That's why you can borrow money with 0 down, or if you're over-incomed, and when I say this, over-income, I mean there's more income in your household. You have to be below a certain income threshold to qualify for 0%. If you're above that, it kind of sounds like it would be backwards. If you're above that, you have to have a minimum of 3.5%, because that program is designed for people under a certain threshold. Now, that's a high threshold. That's in the last I heard, about $75,000 a year for combined household income. It could be higher than that now, and it changes all the time. So I'm not talking about you have to be down here in low income. You just have to be there. But then if you go directly to the bank, if you just went into a bank that does not do secondary markets, they're basically either going to want equity or cash equal to 20% of the purchase price. 9 out of 10 buyers today do not have a 20% down payment. You know, they're either doing 0% or 95%. Then when you go to the secondary market, you've got to think about closing costs. I just did one the other day. She was doing 100% financing. It was on a $100,000 purchase. Her closing costs were $4,500. That's a lot of money, and it is a lot of money. But you got to remember, you're borrowing 100% with no money down on a purchase. But you can build your closing costs into the purchase price. An example of that would be, say, you offer $95,000 for the house, but you want the seller to pay $4,000 in closing costs. So you offer $99,000, and the seller pay $4,000 in closing costs. The offer is really $95,000, and when I call my seller with the offer, I say I have a $95,000 offer. Then when they see the paper, but it says $99,000, yes, it is $99,000, but you're paying $4,000 in closing costs. So the offer amount is really $95,000. But there's a lot of ways around this to where, you know, you can actually get into the house without any money down, or worst case scenario, 3.5% down. You know, on a $200,000 purchase, you're looking at $7,000. At a $100,000 purchase, you're looking at $3,500.
So as you can hear, there's a whole lot that goes into both buying and selling, and that's why a real estate agent's really invaluable for
exactly right.
both sides of that equation. Now, if they are a buyer, we talked about a credit score, which is very important. What are the other things that somebody needs to have in order to qualify to buy a house? For instance, a job, I would assume.
Well, yes, you have the 3 things they're going to look at it. They look at the 3 C's. They look at credit, collateral, and capacity. Years ago, collateral was number one. Collateral, how much money do you have down? Number two was capacity. Number three was credit score. You know, it was collateral, capacity, and when I say capacity, I mean the ability to pay the payment back, your income, the money you have coming in, your cash flow. Now it is credit, capacity, and collateral. They flip-flop. Collateral's at the bottom. They want to see that credit score, but then you also have to have capacity. You know, just because you say, well, I don't have any income, or, you know, or very little income, I'm going to go get me a $200,000 house. Capacity is that is the credit score does not determine how much house you can buy. Right. It determines, can I get one or not get one. Capacity is what determines what price range you're going to purchase in. And whether that be earned income, or whether that be some kind of supplemented income, such as SSI, Social Security, whatever it would be that can be added in to produce what you're receiving as income that they can then base how are you going to make your payment.
So if you're looking to buy or sell in 2018, the time is right for right now.
For both.
For both. And you can contact Monty Parman at the May and Parman Agency, and he can help you go in that direction. And you can also help if you don't know what they're doing. Just go in there, talk to them, and let the process.
We can give you a suggestion of several good lenders you can work with. We can give you an idea of what your house payment is going to run. That way you know what price range. We can say, okay, how much do you want to spend? Well, my maximum I want to spend is X a month, because you've got to remember that payment is going to include four things. It's going to include principal and interest, homeowner's insurance, property taxes, and the PMI, the private mortgage insurance. So you're going to have four things built into your payment. But the nice thing about it is, come December, you don't have to walk into the sheriff's office and pay your property taxes. You don't have to write that big check once a year for your homeowner's insurance. It's all built into your monthly payment. So you don't have to pay those expenses outside, because when you borrow 96.5% or 100%, it is required that you do, they call it escrowing, of those funds to where that money is there available for your lender to pay. You've put the money in, but you have put it in increments each month. So it really helps people with their budget.
Right. One other question too is with commercial real estate. Is it a good time for people with commercial, if they're looking to, so they already have their home, they're looking for an investment, is this a good time for that?
Absolutely. And commercial, you could be talking about buying a business building, business property. Yes, I think now is the time, because I think prices are going to continue to fluctuate up at a very rapid pace like they are in the housing market. It all is. And another thing is commercial property, as far as buying income property, whether that be a house, a fourplex, a duplex, or a commercial piece of property they're buying simply to rent out. You're not going to use that commercial property. You're buying it to put your money in. This is a completely, this is a flip-flop. Let's take this stone and turn it completely over. Now we're appealing to people that have money that is sitting in the bank. If it's in a savings account, it's bearing 0.01%. So let's say you got $250,000 invested, which there's a lot, believe it or not, there's a lot of people in this area that will have that invested. And if you're drawing 10%, that'd be $25,000. That used to be common. Now 1% is $2,500, but 0.1% is $250. You're not getting anything on your money. But even if you were getting 1%, I mean, why would you invest that much money at 1%? Where you could take that $250, buy yourself a fourplex, and maybe have as much as $2,400 to $2,800 a month coming in income. You do have some expenses, you have a little bit of headache, but my goodness, it's a prime time if you got some money to invest in it. And it, even with the low interest rates and the high demand for rent, which has pushed it up, you can even go borrow the money for this investment property and pay for it with the money you have coming in for rent. You've never spent any of your money. You've let somebody else pay for your property. So, you know, whether you need to borrow the money or if you got money in the bank, investment property is great. I mean, when we get a fourplex or a multi-unit, they're usually gone. Just that. Now, if they're well located and the price is right, you know, you can't overprice anything, and anything you overprice isn't going to sell.
Right. And if you're considering getting into the commercial real estate market too, you have to take into consideration it's not just like getting a traditional mortgage for where you bought. There are other stipulations usually that it qualifies.
There's where you're going to go to more of your traditional bank. And they're either going to want 20% down or they're going to want equity of 20%. Let's just say this for an example. Let's say you've got somebody who's got their home paid for, and they don't have $250,000 in the bank, but let's say their home is worth $200,000 with no mortgage. Well, they can get a home equity loan on some of the equity in their home for their down payment and then borrow the other money. Or use the house, do a home equity loan on the house, put that mortgage on the house and go buy the investment property, and somebody else makes the payment back to you. So there are a lot of ways to work that. And even if it's somebody young starting out that has to have all the money, you know, if they've got equity and other things, they can do it, because 20% down payment doesn't mean you have to have 20% of cash laying here. It means you might own other properties. You might own farmland, you might own some land that you have built equity in. Say you paid $100 for it, you've paid $50 off, and it's gone up in value $50. Well, that's $100,000 worth of equity, you know, that you can use as a down payment to purchase something else without selling it.
So there's a whole lot to real estate, and this has been Gary White. I'm here with Monty Parman with May and Parman Agency. If you're looking to buy or sell in 2018, give them a call. How can they reach you?
That's easy. Now I get to do my commercial.
Exactly.
I'm Monty Parman with the team May and Parman. We're located at the Sign of the Time on Main Street in Lebanon, Kentucky. Our phone number is 270-692-2153. My cell number is 270-402-1176. And our website is mayandparman.com. That's mayandparman.com. Remember, when you're ready to sell or it's time for a sale, call the Sale Time. It's Sale Time Team, and Team May and Parman can make it happen for you.
It's been Gary White for Channel 6 Central Kentucky Television.
Thank you, Gary.
Thank you.